By the time you turn 65, you will have paid insurance companies more than $500,000. You will still owe them money when you die. It's 9:47 on a Tuesday. You are 23. You are sitting in a hospital billing office in Nevada, and the woman across the desk slides an envelope toward you with a red stamp on the front. Balance due, $4,800. For one cut, 12 stitches, 6 hours, you make $31,000 a year. The fluorescent light hums. The hold music bleeds out of her phone like a wound. She doesn't look up. Her eyes have seen this exact face on 1,000 other Tuesdays. In this country, the diagnosis is survivable. The bill is the disease. What you don't know yet is that this envelope is not. The worst one you'll ever open is just the first. There will be 6 more rooms after this one, 6 more tiers, 6 more versions of you, and the most expensive plan money can buy. We'll still send you home with a letter that says no. Level 0, setup. 6 hours earlier. You are standing on the sidewalk outside an urgent care in Henderson, Nevada. Your right hand is wrapped in a kitchen towel. The towel was white this morning. It is not white anymore. Through the glass door, you can see the waiting room. Fluorescent light, plastic chairs, a television playing a commercial for a different urgent care. You do the math. Rent is due Friday. There is $400 in your account. The cut on your hand is deep, but it has stopped pulsing. You turn around, you walk to your car, level 1, uninsured, at 23. You drive home with one hand on the wheel. The other hand is propped on your knee, wrapped tighter now in a second towel. Your apartment is a studio above a laundromat. You sit on the bathroom floor. You pour vodka on the cut because it is what they do in movies. You scream into a pillow because it is what people do when no one is paying them to be quiet. You wrap the wound in gauze from a dollar store first aid kit. You sleep with your hand elevated on a stack of takeout menus. 2 days later, the skin around the stitches you never got is hot. Red lines crawl up your wrist toward the elbow. You Google sepsis at 3 a.m. You drive to the ER. They give you antibiotics to an IV. They give you 12 stitches. They give you a bill for $4,800. You put it on a credit card with a 29% interest rate. You miss rent. Your credit score drops 80 points in a single statement cycle. Uninsured does not mean free. It means delayed. It means doubled. It means the cheapest decision you ever made costs you for the next 4 years. You swear you will never be uninsured again. You do not read the fine print. Level 2, bronze plan at 29. 6 years later, you are a warehouse supervisor in Marietta, Georgia. You make $52,000 a year and you have a back that aches every morning before sunrise. It is open enrollment. You sit in the cab of your pickup during lunch break, scrolling through plan options on your phone. The bronze plan is the cheapest, $315 a month. You click enroll. You read the deductible last, $6,000. You laugh, you do not have $6,000. But you have a card now. You keep it in your wallet, behind your Costco membership. You touch it sometimes when you pay for groceries, the way other people touch a rosary. In February, you wake up at 2 a.m. with a fever of 102, chest tight, heart fast. You Google symptoms, you drink water, you go to work. Because going to the doctor means meeting that deductible. Means the first $6,000 come out of you. You are paying $315 a month for a plan you are afraid to use. You are insured and uninsured at the same time. The card in your wallet is a permission slip you cannot afford to redeem. This is not coverage. This is a number you cannot touch. Level 3, silver plan. At 36, 7 years later, you are an office manager at a logistics firm outside Pittsburgh. You wear pressed shirts now. You take meetings about quarterly throughput. You make $78,000 a year. The HR woman runs through the slides. Bronze, silver, gold, platinum. You pick silver because that is what responsible people pick. The premium is $687 a month, the 2026 marketplace average. You make too much for a subsidy and not enough to feel it. The back pain you have been ignoring since Georgia gets worse. Your doctor orders an MRI. The denial letter arrives on a Wednesday. Not medically necessary at this time. You call the number on the back of the card. You sit on hold for 4 hours and 17 minutes. The hold music is a piano cover of a song you used to like. You will never like it again. A representative named Brandon tells you to file an appeal. You file the appeal, you submit forms, you attach notes. You wait 28 days. The second letter says denied. You sit at your kitchen table with the letter in front of you, and you understand something for the first time. The bill was never the enemy, the form was. The form is the system's perfect weapon. It does not say no. It says not yet, not now, not enough documentation, come back, try again. You are paying $8,000 a year for the right to fight paperwork. The denial taught you something else too. Coverage is a tier system, and you were not on the right tier yet. Level 4, Gold/PPO at 45. 9 years later, you are a regional sales director in Naperville, Illinois. You have a corner office. You make $140,000 a year. Your back has not stopped hurting. You got married somewhere between Pittsburgh and Naperville. You barely remember the wedding. You remember the deductible the year you said yes. This time you do not pick the cheapest plan. You pick the one with the widest network. Gold PPO. $12,000 a year for premiums. No referrals. Direct access to specialists. The take-home pay shrinks. You feel it every paycheck. In November, the abdominal pain starts. By Thanksgiving, you cannot eat. You see a specialist on Monday, ultrasound on Tuesday, gallbladder removal scheduled for Friday, approved in 72 hours. You lie on a gurney in the pre-op bay watching the monitor. Count your heartbeat. The lights are soft this time. Someone offers you a warm blanket. The nurse asks if you want extra pillows. You realize you are not thinking about the bill. For the first time in 22 years, you are not thinking about the bill. The surgery is clean. You go home in 2 days. The statement arrives a month later. Your responsibility after deductible and coinsurance is $640. You frame it. You actually frame it. You are not buying healthcare anymore. You are buying access to people who do not say no. You are buying the absence of the form. You are buying silence from the machine. You think you have reached the top. You have not. Level 5, Platinum at 54. 9 years later, you are VP of Sales in Houston. You make $210,000. The corner office has a view now. The view does not matter. Your spouse has stage 3 pancreatic cancer. Open enrollment comes around. The HR consultant slides platinum across the table. $17,376 a year. The deductible is almost zero. The out-of-pocket max is the lowest tier. The company offers. You sign without rating. The oncologist prescribes a targeted therapy, a specialty drug. $13,000 a month at retail. You are not worried. You have platinum. You have the best plan money can buy. The letter arrives in a thin envelope. The drug is non-formulary. The exception request is denied. The appeal is denied. The peer-to-peer review with your insurance's medical director takes 11 minutes. He has never met your spouse. He denies it again. Your copay, if you want the drug at all, is $4,200 a month. You sit in the parking lot of a Walgreens at 9 in the evening, and you understand the last secret of the system. There is no top tier. There is only the next ceiling. You paid for the most expensive plan in America. The machine still has a room you were never invited into. A room where the drugs your spouse needs live. A room with a different door, a different price, a different list of names. You start a GoFundMe in the morning. Level 6, Medicare at 65. 11 years later, you are 65. You retired to Tucson, Arizona, in a small house with a lemon tree in the back. Your spouse survived. The GoFundMe paid for 14 months. Then their own Medicare arrived, and the system that denied them at 54 covered them at 65. The same drug, the same diagnosis, a different account number. You sit at the kitchen table with a stack of pastel brochures. Medicare and You, Part A, Part B, Part D, Medigap, Advantage, IRMAA. The standard Part B premium is $200. Yours is more than double. The system remembers what you earned at 63. It always remembers. You call the Medicare hotline. The hold music is a piano cover. Different song, same piano, same feeling. You pick a Medigap plan. You pick a Part D formulary. You read the fine print this time. You read every line. Your heart medication, the one you have taken for 10 years, is now tier 4. The copay went from $15 to $145. The machine does not retire when you do. It just changes your account number. The hold music fades. You close your eyes. You see a kid in Henderson, Nevada, 23 years old, bloody towel around the kid's hand, standing on a sidewalk outside an urgent care, doing math in a head that hasn't learned the math yet. You want to tell the kid something. You want to walk through the glass door, sit down, and explain everything. The 6 tiers, the 8 rooms, the 42 years. The $500,000. The drug your spouse almost died waiting for. The copay that doubled the day you stopped earning. But the kid is not listening. The kid puts a hand on the door, pauses, walks away. The waiting room economy does not notice. It never does. It just opens the next door, slides the next envelope across the next desk, and waits for the next 23-year-old to learn the only lesson the machine ever teaches. The cheapest plan is always the one you cannot afford to skip.